Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Well, Indian equity markets are bracing for somewhat a flattish start coming in for equity markets. If Nifty signals a tepid start, Wall Street has ended flat after pop from July inflation data fizzled in. Shares in Asia Pacific region were trading in green on Friday and FIIs. They bought in shares for second consecutive session today, although the amount was minuscule to an amount of 331 odd crore. DIIs, they purchased shares to an extent of around 703 odd crore. Let's talk about stocks with highest delivery. Marico, HUL, SRF, Tata Motors, Crompton Greaves, along with Crompton Greaves Consumer Electricals. These are going to be some of the companies which have witnessed highest delivery interest. In terms of earnings that we like to keep an eye out on, ONGC will be reporting in numbers, Nykaa will be reporting in numbers, Apollo Hospital Enterprise, Glenmark, Nalco, SpiceJet, Hindustan Aeronautics, HEG, IRFC, Jindal Steel and Power, along with Kalpataru Projects International will be some of the companies which will be reporting in their numbers today, along with Raymond and Sri Renuka Sugars for that matter. Let's talk about the FNO cues out there, FII trend in FNO. Well, they've been sellers to an extent of, in index futures as well as options out there. For index futures, they've sold in around 1,162 odd crore. For index option to a tune of around 2,555 crore. They've also been sellers in the stock futures, along with being sellers in Bank Nifty for that matter. Along with Bank Nifty options too. So it's second consecutive session that you're seeing FIIs being sellers across the board out there when it comes to the FNOQs. Let's talk about the ban, the stocks that have newly entered into the ban. Z Enterprises Limited, after the up move that we saw post the Sony Z merger coming in from NCLT. Granules, Canfin Homes, Mannapurna Finance, these are some of the companies which have freshly entered in the ban. What has been retained? Chambal Fertilizer, Delta Corp, Balrampur Chini, Hindustan Copper and Indiabull Housing Finance. Now, let's discuss some stocks and strategies with Kush Bohra, technical analyst out there and founder for kushbohra.com. Good morning there.
Hi, good morning, Nickey.
All right. Would want to understand your strategy on Nifty. The index seems to have formed a new lower top at around 19,645 levels. Is it a buy on dips or wait on the sidelines for that matter?
Neither for now. Or actually, if I have to pick one, I'll say, wait on the sidelines, and I'll give you a couple of reasons for it. If you see the last week, from the last expiry to the one that ended, yesterday, it's been a tale of two halves. The index was forming a higher high, higher low kind of a pattern, and it's a very bullish sign. If you read the technicals well, but if you see for the last couple of days, we've actually gone sideways, and a bit of a caution advice here. Because the last time we were at around 19,700 and we fell all the way to 19,300, the broader market saw a very sharp cut. A similar sell-off was seen yesterday in the broader markets. Hence, a word of caution here. Now, there'll be a temptation to buy the range. The Nifty has been in 19,500, 19,650 kind of a range, and it's been playing out well. And hence there could be a temptation to buy it around the 19,500 zone. But I would suggest caution here. If the Nifty slips, and this is a conditional trade, if Nifty slips below 19,450, this weakness could extend further, and that's when I would go short. Either buy a put or maybe just go short on Nifty futures or targets of 19,300 and 19,150, and there your stop loss could be 19,550 kind of a zone which the Nifty sort of resisting at for some time now. So a conditional trade on the short side, and I'll be a little cautious here. A very similar view on Bank Nifty as well. This is where the weakness actually started before it caught on to the Nifty. Here the level is 44,400. If that breaks, I would actually go short for levels of 44,000. So word of caution, both conditional trades, but yeah, I wouldn't be a buyer on the indices just yet.
Sure. Let's also talk about Bank Nifty, because after the RBI policy, the Bank Nifty index encountered significant selling pressure, leading to a challenging situation. Of course, a substantial resistance is evident around that 45,000 mark. You think breaking through this resistance level could be demanding?
Oh, absolutely. In fact, if I look at the last 6 sessions, there's been an attempt to break these levels, and it's not been successful, right? At least not on a closing basis. So the more number of times you attempt to break it, but you fail at it, just creates a case for weakness. Also, we were able to, breach above the 50-day moving average for the last few sessions. But yesterday, we again fell below that. The momentum indicator setup also turned negative here. So hence the word of caution on Bank Nifty as well. And as we said, the weakness started here first, so you could expect a rebound also to come here first. But currently the setup does not really warrant that kind of a aggressive buy on the Bank Nifty.
All right, so a bit of a cautious stance has been clearly taken both on Nifty and Bank Nifty, but 3 recommendations there out for our viewers, which could be money-making ideas for that matter.
Sure. So first up is JSW Steel. Despite the kind of moves that we've seen in the index, they've gone broad. They've got rather range bound, and we are seeing a cautious view. There is still some, there are still some pockets in the market which are actually doing well. So JSW Steel, it's been doing well for the most part. It's respected its 20-day moving average. In fact, for the good 2-3 months now, it's actually respected that. Yesterday we saw a breakout above the 825 level, which was the resistance zone for it. So JSW Steel is a buy. 840 and 850 are my near-term targets on this, and 820 is where I would place my stop loss. My second stock is Data Patterns. Very similar structure. The stock had actually gone range bound, and it had seen a bit of profit booking from 2160 odd levels. But the revival seems to be on track again. Couple of days back, we saw a breakout on the back of very good volumes. So Data Patterns is a buy here. 2160 and 2220 are my targets. 2060 is where I would place my stop loss. And my third pick is KDDL. This stock has been actually an outperformer or almost agnostic of what is happening in the market. It's actually shot up from 1600 levels to almost 1800. Opening slightly in the red, this could be a good entry point. KDDL is a buy. 1850 and 1900 are my targets. My stop loss here would be 1750. So these are the 3 stocks that I have on my radar, and incidentally all on the buy side.
Sure. I'd also want to understand your view per se on the banking sector right now and stocks that look attractive within that category. And then we'll address the stocks and news and come back to you again after the markets open.
Well, very limited pockets, in the Bank Nifty at the moment from a technical standpoint, that look attractive. If someone wants to stay with this cautious trend, I would suggest a short on Axis Bank. The stock's actually tried a revival, and if you see, it's actually broken down below its 950 support zone. So, at the opening or at the level of 937, the stock could actually slip further to levels of 925 and 910. So this is one stock that I would have on my radar from a short perspective. 950 is where I would place my stop loss. But if one were looking for a buying opportunity, then RBL Bank seems to be doing rather well. We know the kind of news flow that's come into the stock, but despite that, or rather in spite of that, you see the stock's actually respecting its 20-day moving average, turned positive even when the entire market actually hasn't really done that well. So very clear relative strength here. RBL would be one stock that I would have on my radar from the banking stocks, from a buy perspective. 218 is where I would place my stop loss. My first target would be 232 and my second target would be 240.
All right. What do you also make out of HCL Technologies? It's backed in a big order, which apparently sets it on course of not lowering the revenue guidance and perhaps some certainty in terms of financials. Does it look attractive from the chart perspective as well?
So the IT stocks had actually turned a very interesting buy post the numbers, because if you see, most of these stocks had made their lows somewhere close to the.
Kush, we'll just address the markets open first and then get back to you. Nifty 50, well, we are seeing a subdued start coming in for Indian equity markets. It is a little bit lower at this point of time. Remains to be seen how the direction has been stacking up. We are expecting a flat amount of start coming in for the markets, but remains to be seen if we are looking at it. Right now, the charts are indicating a bit of downward momentum playing out, and it is a negative start. We're seeing losses to an extent of 0.1% coming in for Nifty index right now. Talk about Nifty index and the levels that we are looking at, 19,500 mark. So that's the level, and the losses have just got a little more pronounced, I would say, in the early deals. Let's look at Bank Nifty index right now. We are looking at certain amount of selling pressure building in even for Bank Nifty index. 0.25% of losses coming in for Bank Nifty index. We're seeing 45,000 mark has clearly been way below that after the RBI move that we've seen in the previous session. Mid cap index, it's been holding it on to green. Well, a little bit of flat with positive bias. Let's just say it's a flat start coming in for mid cap. And for small cap index, let's see how is that stacking up. Are we seeing some amount of outperformance coming in from small cap itself? just to see where the trend has been. Okay, so small cap index right now has been doing well. Gains to an extent of 0.25% coming in for the small cap index. Trend remained intact. Despite the flat subdued start, small cap index seems to be outperforming. In terms of sectoral indices, we have gains to an extent of 0.5% out there. And in terms of FMCG, FMCG now also is witnessing some amount of selling pressure for that matter. Pharma index is not doing any different either. 0.5% of loss coming in for the pharma basket. Talk about the consumption story, that remains down and out with losses of around 0.4%. In terms of other sectoral indices, 0.5% of losses coming in for the metal basket and auto index too. Well, a flat start, but a bit with the negative bias. Hero Motocorp and the numbers have been out. We're going to be talking about that in just a bit. Realty index gains to an extent of 0.4% out there. And in terms of infra too, we're looking at some amount of pressure building in for that one. Let's talk about the market breadth, how it's been spread across. 18 advances, declines 32. So clearly, the market breadth right now is in the favor of declines. Let's address the top gainers and the top losers that we have on the list right now, just to see how the market momentum is shaping up. We are looking at certain amount of certainty playing out in terms of how these indices are behaving, but how the top gainers and the top losers are looking at, that remains to be seen. HCL Tech, Power Grid, Tech Mahindra. Of course, the IT basket has done well. Wipro, Apollo Hospital and DRL are some of the other gainers that we have on the list. In terms of top losers, is to say IT has been the top performer after days that we've seen. Resim, Britannia, Sun Pharma, these are some of the other losers that we have. NTPC, ICICI Bank and HUL, along with Kotak Mahindra Bank, BPCL and IndusInd Bank. Like I said, the market right now is clearly in the favor of declines. Kush, come in on this one. What do you make out of the IT stocks? We spoke about HCL. Any other stock that you like within the basket? And then we'll discuss the stocks news.
So, as I was saying, the IT, at least most of the IT stocks, they formed a base somewhere close to their results and have been gaining from strength to strength. Now, on the back of good results, the breakout was imminent, and we're getting to see that on HCL Tech. But I'm afraid I think the large part of the move may have been done. 1200 is where the resistance zone comes in for this. So if you're a positional trader or an investor, this is still a good time for you to enter. But from a near-term trading perspective, I'd suggest, if you have an existing position, only then do you hold on with a trailing stop loss of 1060 for levels of 1200. But otherwise, no fresh entry warranted here. Overall, the setup looks comfortable. HCL Tech has always been one of our top picks in the IT large cap names. And as far as the other ones go, Forge is something that I like. The stock has actually done rather well. If you see from levels of 4650, it's actually almost about 5200 now. And there is no signs of this rally abating. We've seen volume pickup also yesterday. So I think this stock from the mid-cap space in the IT names could actually do well. From a positional perspective, 5500 is the level that we are looking at, and 5000 or 5050 is where I would place my stop loss if I enter at these prices.
Sure. I'll quickly address the stocks and news and get back to you in that case. HCL Technologies, where some of the momentum has been building in. The company has signed in a mega deal worth around $2.1 billion with Global 100 Corporation. Deal is expected to have positive revenue impact over the next 6 years, beginning in November 2023. Morgan Stanley has given an overweight rating to the counter after the development with a target price of around 1,200 and said that such deal is only expected to provide greater comfort and also is expected to lower the perceived risk of potential revenue guidance cut coming in from the company at the lower end. It expects some amount of underperformance to reverse. What we have also is Prestige Estate and the downgrade which has come in by Jefferies on this counter. It's been downgraded to hold and the target price is to extent of around 620 per share. Says that the largest listed developer by pre-sales in Q1 has 30% rise in year-on-year percent performance coming in on the pre-sales level. The good performance, of course, is coming from the core Bangalore market. Management remains confident of 25% year-on-year growth on a strong launch pipeline. Let's talk about Hero Motocorp and how the stock has been stacking up early in deals today. Well, for Hero Motocorp, Revenue is up by 4%, and the number is coming at 8,767 odd crore, as compared to an estimate of number of 8,958 crore. A bit of miss on top line. Bottom line is up by 32%. The number is coming in at 824 crore, and the expectation was to an extent of 876 crore. EBITDA, although is higher by 28% at a number of 1,206 odd crore, most of the analyst community was working with an estimate of 1,185 odd crore. So more or less on operational front, it's in line. A bit of miss coming in on the top line front. Right now, the stock has taken a hit and is trading lower with losses of around 0.6% or thereabouts. Talk about Biocon and the results that has come in. Revenue is up by 60% for this one. The number is coming at 3,423 odd crore. The estimates were to an extent of around 3,355 odd crore. The stock right now is trading lower with losses of around 1.5%. Net profitability down by 30%. And if you talk about the EBITDA performance, that is up by 79%. Essentially, margins, they have remained at 21% as compared to 18.7%, as compared to an estimate of around 24.7%. So a bit of disappointment also creeping in from Biocon. Mazagon Dock Shipbuilders, beg your pardon there. Well, for Mazagon, it's been the top gainer that we had on the small cap index, perhaps a multi-bagger stock that you're looking at. But the numbers, not so encouraging. Talk about top line, a 3% dip there, almost 2.5% dip out there. Talk about EBITDA performance, well, flat, down by 1.5% or thereabouts. Margins have come in at 7.9% as compared to 7.8%. So that's pretty much stable performance when it comes to the margin profile. The net profitability, however, is up by 39.8% for this one. What I would also like to address is the MSCI, which has released in a list of stocks as a part of its August Global Standard Index review, which comes into effect September 1st, 2023 onwards, where it's included PFC, REC, Ashok Leyland, and also included in Supreme Industries, IDFC First Bank, HDFC AMC in the Global Standard Index. What it has excluded per se is ACC from the Global Standard Index. That's what we have in terms of stocks and news. But let's go back to Kush and check with him. What does he make out of the FMCG basket, specifically something like an HUL and Britannia, which have not been doing too well in trade? Does he see some amount of value buying on this one? Some formations which are taking place, which could be a break even for these counters? Kush, come in on this one.
Sure. Not so optimistic just yet, because this is like a classic case of catching a falling knife. If I see both the stocks post the numbers, in fact even before the numbers came out, the downward trend had already begun and doesn't seem to be halting yet. In fact, the volumes are picking up on the downside. The only saving grace that I see for some of these stocks is the fact that they're approaching oversold territories. Now, Britannia is already in the oversold territory on the RSI, if you see, and very close, in fact, bang on, at its 200-day moving average. So from here, you could expect a bit of a technical, rebound. This is also a near-term support zone for Britannia, medium-term support zone rather. So that's the only technical saving grace that that could come in and maybe bump up the stock a little. But otherwise, I don't see buying emerging on these from a technical perspective. Once the selling stops, once we see some kind of bottom formation happening around these stocks, is when we could consider a buy. But that would be more from a positional perspective, given the kind of downtrend that we've seen. So Hindustan Unilever, Britannia, both of them actually are on the downtrend and no signs of stopping just yet. The only pick that I could look at from the FMCG space is Emami. The stock has been doing well, and the volume pickup has been excellent. Given the kind of trend that the market has been in, there's a very clear relative strength that we are seeing in this stock. So if someone really has to pick one, Emami is something that you should have on your radar. 530 and 550 are the targets that one could play for, and 500 is where I would place my stop loss. So compared to the other two, this one certainly more strong.
All right. What I also wanted to address along with an IPO, which has come in for subscription, TVS Supply Chain IPO, second consecutive day of subscription which has opened in for this company. The issue demand seems to be subscribed at 55% on day one. Retail portion C has seen a good demand overall. The IPO, remember, has opened in subscription on August 10 and will close on August 14. It's received positive response from the retail category, while QIBs, however, have shown some amount of limited, interest within this. NIIs have responded fairly to the issue as well. If you talk about just a little bit more details for this one, well, the price band has been fixed to an extent of 187 to 197 per share for the IPO, and for the retail category, bids can be made for a minimum of 76 equity shares and the multiples thereafter. Now, do remember the fact that 75% of the issue has been reserved for QIBs, 15 for non-institutional investors, and 10% overall has been reserved for the retail category overall. Well, the company already has raised in 396 crore from 18 anchor investors, and this includes the like of something like in PNB Paribas, Franklin FlexiCap Fund, along with essentially it has Franklin, a number of schemes which are invested within this particular IPO. And do remember the fact it's for 880 crore, 600 crore for fresh issue, and 280 crore for the OFS overall. It is an offering which is coming from the TVS table after a span of nearly 3 decades. So that's interesting to watch out for. The details are up on the screen out there. It has opened for subscription yesterday, but we had a host of events covering the RBI. And look at the screen right now. It's all up. Issue size, fresh issue, OFS, the basis. When do we expect the shares to be listed? Perhaps on 23rd August is when we're looking at the shares to be listed. Grey market premium is to an extent of 30 rupees or thereabouts. So remains to be seen if 250 odd level or 230 to 250 is where the wider expectation is. But I'm going to go back to Kush and check with him on what does he make of something like in Mazagon Dock. It's been a multi-bagger stock thus far in the small cap category, but if you look at the numbers per se, they haven't been too attractive. But how is the chart stacking up for you? You find you find more stream to the rally for this one?
Well, not in the near term, precisely for the reason that you've already mentioned. It's been a multi-bagger, and in fact, if I look at the near term also, the stock was actually at about 600 odd levels, and this is just April. So it's been 4 or 5 months, and the stock has actually risen more than 3 times from there. So here you would expect some sort of profit booking, very clearly visible on the charts as well. It's gone in a bit of a downtrend, reached its 20-day moving average, slipped lower on RSI as well. So a couple of pointers, all in all, suggesting that this could either go into a bit of a consolidation zone, or maybe you could see some more profit booking on this. So if I'm looking at buying into this, there's a gap at around 1600 odd levels, and actually wait for that. If I get the stock at around those levels is where I would start accumulating. Up until then, if I have an existing position, I will hold on with a trailing stop loss somewhere close to 1670, 1675 kind of zones. Any slip from there could accelerate the fall. So no new buys until the stock comes to about 1600 odd levels. And after such a meteoric rise, some sort of profit booking is absolutely warranted.
What about the auto stocks, especially Hero Motocorp, which is reported in the numbers? Anything that you like within that basket?
So we were actually looking at some of these names, be it Maruti, be it Tata Motors, but the rally seems to have fizzled out after, or at least they've gone into a consolidation kind of a mode after the auto numbers were announced. So Hero Motocorp for sure gave a spurt. But if you see, the spurt lasted only till the day, the announcement of the, bookings came in, and 3100, where the 20-day moving average lies, the stock made a high on that day and has not been able to take that out for the last 3 sessions at least. So I think, this will perhaps act as a resistance zone for the stock. So I wouldn't buy it just yet. If I have an existing position, there is no harm in holding, but not currently. One stock that we like in the, auto space is actually Ashok Leyland. Again, very solid charts. The stock was due for a breakout, and we finally, got one. And from there on, the stock's actually been gaining from strength to strength. From a medium-term perspective, also 150, 160 were the zones where the stock was resisting, and that seems like a distant history, right? But that was only about until June, where the stock was trading at that level. So Ashok Leyland, we still like here. From a trading perspective, you could buy it for targets of 200 and 220, and my stop loss here would be somewhere close to a 175 kind of zones. So this is one stock that we like. The others have gone into a bit of a consolidation zone. So I would look at accumulation, but not an aggressive bet just now.
Kush, also your view coming in on the banking index. At the start of the earnings season, banks were clearly the favorites. After accounting for slight lower NIMs because of rising deposit rates, banks were still the best story in the town. That view, however, has changed over the last couple of weeks, where now the analyst and the investor community have started fretting over the entire pressure that we've seen on NIMs. What are the technical charts suggesting at this point of time?
So, as we said, the pockets of betting or going long in the entire banking space right now are limited. I'm sure some of these names will turn around, and if I'm looking at anywhere from 3 to 6 months kind of perspective, I'd be buyers in most of them. But if you're looking at a more near-term kind of a perspective, this is where the challenge lies. The PSU banks were the stars of that rally that you just mentioned, right? I mean, you look at the likes of Bank of Baroda, SBI, Canara Bank, PNB, and the smaller names. They had done stupendously well. But once you hit that overheating kind of a zone, there was a very clear downtrend and a sharp fall at that. As I said, there could be a very strong case made for them that from a 3 to 6 months perspective, this is a very mouth-watering kind of a level. At least on SBI, this could turn out to be a good buy at these levels. So from that kind of a time horizon, I would start accumulating SBI. But from a near-term trading perspective, I'd say an avoid on these because they're struggling to break out of their resistance zones. The only stock that we like currently here is something that we discussed a while ago, which is RBL Bank.
All right, Kush, we are just going to leave it at that. And thank you so much for taking out the time and speaking to us this morning. All right, with this, it's a wrap, and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. And for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.